At the same time that we are seeing a supply suffocation with 500,000 Bitcoin leaving the exchanges over the past 1 year alone, we're watching something really interesting. We are seeing not only the world's most successful hedge fund trader, Paul Tudor Jones, quietly double his Bitcoin position over the past quarter, but we're also seeing more billionaires, more pension funds, and more whales aggressively accumulate Bitcoin at rates that we have never seen. But we're not only seeing a little bit of a supply suffocation brew in the Bitcoin space, Donald Trump and the world's richest man, Elon Musk, have just kind of jointly created a little bit of a supply suffocation in the gold space. So today I want to talk about what is going on in this realm of Bitcoin and gold, analog store of value and digital store of value, and why are we seeing a supply shock in both markets? And we're going to be discussing this with a very, very special guest, fellow co-founder of Bitcoin News, Rob Wallace.
Cheers, man. How's it going?
It's going good, and I think it's going to get really interesting when we start discussing what's going on with Paul Tudor Jones. Let's start with the news of the world's most successful hedge fund trader, potentially of all time. Some people say that. He's quietly doubled his Bitcoin holdings in the past quarter. Did you see this news that floated across our desks earlier in the week, Rob?
It's big news. He is no joke. PTJ is the man himself, and he's been talking about Bitcoin since at least 2020, 2021, when the COVID crisis hit and they started printing $6 trillion in the span of 18 months. He knew he had to get on the fastest horse, and the fastest horse is, of course, Bitcoin.
I couldn't agree more. Now, you said something really interesting. He's no joke. The reason why he is no joke is the fact that he's just squatting on a lazy, $8 billion net worth. He's not just a billionaire. He's an incredibly rich billionaire, incredibly wealthy. And I think a lot of people listen to what Paul Tudor Jones says.
Yeah, they do. And they take his portfolio as signal. And I think the biggest signal is not only that he bought more Bitcoin, but the fact that the Bitcoin ETFs are now his single largest position of anything in his whole portfolio. Crazy.
Dude, I literally didn't even know that. This is the good thing about collaborating and doing this one with you, because I had no idea about that. That's huge.
Yeah, this man has he knows about the melting ice cube, right? He's been on CNBC numerous times saying that we are facing a serious currency risk here, right? The dollar, the world reserve currency, is being inflated into a dire circumstance, and we need to protect ourselves as investors, as individuals. And when you've got a lot of money to deploy, hundreds of millions of dollars, he decided to put it mostly into Bitcoin.
It's actually huge. Here's another article. This is what you're talking about, Rob. Bitcoin is the fastest horse. And doesn't time fly? As Bitcoin blasts towards $10,000, now we're blasting towards $110,000.
Yeah, I mean, I remember that time. That was still in the thick of COVID, right? The halving had happened about a little bit less than a year before that, in May of 2020. And stocks were ripping, meme stocks. Of course, the whole entire crypto markets with NFTs, and ETH was still a viable option that people were investing in before it died over the last 4 years. But yeah, he was able to see through the noise and realize that Bitcoin is going to outperform gold. It's going to outperform any other inflation hedge out there. And you gotta cast your ballot on that one.
So I think a lot of people listen to what Paul Tudor Jones says, but I think a lot of people are also watching what other large multi-billion and multi-hundred billion dollar firms are also doing with their money. And again, in the introduction, I said we don't only have billionaires, we have nation states, we have central banks, we have pension funds, we have lots of different entities who are all quietly accumulating Bitcoin. I want to talk about the multi-trillion-dollar banks in America buying Bitcoin in a moment, but let's transition a little bit to the state of Wisconsin. They are officially, as this article puts it, going all in on BlackRock's Bitcoin ETF. Now, most people will remember the state of Wisconsin because they were the first pension fund in the US to buy Bitcoin. I think at the time it was something like $160 million position. And now it looks as if they have also doubled their holdings of Bitcoin, because right now we saw the 13F filing with the SEC recently come out, and they now hold $335 million worth of Bitcoin, which is just crazy. Well, Bitcoin ETF anyway, not real Bitcoin. What do you take on this one, Rob?
Yeah, it's funny. And when it comes to pensions, it seems like a lot of the states in the Midwest were the first ones to really adopt it. It wasn't these banking places like New York City or tech forward places like California, but rather Illinois and Wisconsin. These pension funds realized that, of course, they're sitting on all these hundreds of millions of dollars. They need to put it somewhere, and Bitcoin is the place to do it. And this last year, they've realized nothing else has beat it, right? Bitcoin was the best performing asset of 2024. And so if you were in those ETFs from the beginning when they launched in January of 2024 and have ridden them until today, you've been an absolute winner. And these guys, they're not used to huge returns, right? They're used to just getting the same return as the S&P, between 7 and 9% a year. So, I mean, with Bitcoin going over 100% last year. If you have ridden those ETFs, you are doing very, very well. So it makes all the sense in the world that they would be doubling down on their position.
This is the crazy thing I think a lot of people miss about FOMO. These guys are going to double down. They're going to continue buying more and more if they are proven right, which I think is really interesting. Like, I mean, we are watching a supply and demand imbalance. That's kind of, the whole point of this live stream today. Not only in the Bitcoin space, but also in the gold space, we are seeing this mismatch between supply and demand. Before we do talk about gold, maybe we should talk a little bit more about what is going on in the Bitcoin space, because I think we're seeing some really interesting things. We're seeing demand from the whales in the Bitcoin space absolutely explode. And this is happening at the same time that we're seeing this drainage of exchanges. Have a look at these massive pink bars. This is showing the demand and Bitcoin inflow into addresses that are classified as accumulation addresses. So these are not only whale addresses, but these are whale addresses who only accumulate Bitcoin. And we can see, despite Bitcoin consolidating at $100,000 and boring a lot of people, we are watching these whales continue to accumulate Bitcoin. What are your thoughts on a little bit of whale watching, Rob?
Yeah, CryptoQuant released an interesting chart this last week showing the difference between old whales and new whales. Old whales have kept their stacks pretty constant, with the new whales just jumping hand over fist trying to get as much Bitcoin as possible. We just put up a chart today by Bitwise showing that in the end of March of 2024, so 11 months ago, there was only 61 institutions that were holding Bitcoin ETFs. Now there are 3,323 institutions that are holding Bitcoin ETFs. That is a 54.5x increase in the amount of institutions holding Bitcoin ETFs. Again, it's the winner. It's too hard to deny. I mean, you've got Millennium Management. They've increased their position up to 2.6 billion. Brevin Howard has a 1.3 billion position. Goldman Sachs has a 1.58 billion dollar position. So, I mean, these guys are getting billions of dollars worth of Bitcoin while the price hovers around 100K, and it's been hovering there for the last 3 months. And I think some people might be getting sort of antsy or worried or don't understand how can all these institutions be gobbling up so much Bitcoin, yet we stay pretty much in the same place we were 3 months ago? Well, I think there's a couple of answers to that question. One being 100K is a round number, right? And if you've been holding Bitcoin since it was $100, $1,000, you've 100x'd or you've 1000x'd, and that's a nice place to offload some. So it's a natural human inclination to sell at these big round numbers. And so I think these old whales have been selling essentially to these institutions. So these old coins have been switching hands to these new institutions coming on board. And of course, these are sophisticated investors, right? They know how to play the markets. They know how to play futures, and they're not going to just buy stupidly and let the price run away from them while they do it, right? They're going to do this in a measured manner. And that's what we've seen. I think these last 3 months are just an accumulation period for these massive institutions to try to get as much Bitcoin as they possibly can without letting it get away from them.
You make a really good point about the price. We've just been going sideways here for 3 months. And this is the Bitcoin price. We really have kind of turned into a stable coin a little bit at 100K. A lot of people are like, what's going on? What's happening? Is Bitcoin topped? But again, it kind of reminds me of mid-2024. That's the American summer, isn't it, Rob? Between March and, September. I think we saw price action then that really bored people to death. It was in this little period here where Bitcoin was just chopping sideways at 60 to 65,000. A lot of people were bored. A lot of people were like, all right, what is going on? What's happening with the price of Bitcoin? But like you say, we saw data to show that whales were aggressively accumulating in this range here. We said, stay patient, stay the course. I think it's interesting that we're seeing similar signs. We're seeing more data that whales are accumulating here in this little, it looks like it's about a 3-month consolidation period right now. And again, nobody knows where the price is going to go. It's something we say on the channel a lot. Anybody who tells you they know for certain where the price of Bitcoin is going, they're lying to you. I don't think they know where the price of Bitcoin is going, but like you say, you brought up a great chart. I think watching what the new whales and even just the old whales are doing, I think it's pretty interesting. And this is the chart you're mentioning. Have a look at the growth of the new whales. That is the purple section of that chart. That's going parabolic. It's crazy growth.
Yeah. And actually, if you go back to the price chart, I think something interesting to talk about is we might have entered this new meta where we do these big legs up, as we saw in March of 2024, as well as November, December of 2024, where we do these nice gain 30, 40%, and then we chill, right? And then we consolidate for 8 months and then wait, and then we might do another 30, 40%, right? And I think it's that kind of market that really drives people the most crazy. And that's what markets like to do. They like to separate the most amount of people from the most amount of money, right? So if you can't handle Bitcoin chopping around for months on end, I think you got to zoom out, look at what it's been doing for the last 2 years, and realize that this might be the new meta, the stair step method, where Bitcoin jumps up, it's super exciting, then it consolidates for months. And can you do that? Can you hold out? And I think as Bitcoiners with low time preference, you realize that you're in this for the long haul. You're holding Bitcoin for not quarters, not just 1 year, but multiple years, right? 3, 4, 5, 10 decades even. You're here for the long time. So this should be just par for the course, and do what Bitcoiners do. Provide value, create value, earn money, turn it into Bitcoin, the hardest money, and keep it going for the long term.
Speaking of people getting wrecked, I have a chart that shows why people could get wrecked in what you just coined the new meta. I really like that. I actually haven't really heard anyone call that a potential, new blueprint for how Bitcoin's going to unfold in these bull markets, where you see long consolidation periods that really bore people to death, and then boom, you see a massive big rally. So I have a chart that I think might put a little bit of a visualization on what you're talking about there, Rob. But first, I want to say hello to Lee. Lee is in Sydney. We're going to answer your question later, Lee, in the next segment of today's live stream, because we do want to talk about potential price manipulation and maybe takeovers of certain Bitcoin companies. We don't want to give too much away too quickly. But what we will say is I think Satwise here makes a great point. I think what we're watching right now is a little bit of a beach ball being suppressed under the water, so to say. And if you've been down to the beach and tried to hold a beach ball underwater for too long, you know what happens. Eventually, that thing's going to come up pretty quickly. And when it blows, it's going to blow big. Satwise there nailed it. But to kind of show you guys the chart that I think sums up this new meta, Rob, I pulled this chart up in the background. This is a chart I like to show you guys from time to time. I think if you're new to Bitcoin, this chart can be a really helpful one to help kind of, let's say, fortify you in maybe taking a certain direction. Because I think a lot of us, when we're new to Bitcoin, we think we're smarter than the market. We can trade Bitcoin. We understand this new meta. We know exactly when Bitcoin's going to consolidate and when it's going to rally. So I might trade my Bitcoin. I know I made this mistake in 2017, 2018, 2019. And it wasn't until I saw charts like this that I began to think about things a little bit differently and just hold Bitcoin for the long term. So what this chart is showing us is it's showing us what Bitcoin does in its best 10 days combined each year. So that is what those big purple bars are showing us. It's showing us Bitcoin's best years. And in each year, right next to it, in the gray bars, that's showing us Bitcoin's total return for the remaining 355 days. And in every single year, you guys can see the purple bars are bigger than the gray bars. So that is showing you Bitcoin surprises people. And typically when it rallies very quickly, very aggressively, and Bitcoin's best returns happen in a 10-day period. Have a look at 2013, for example. Bitcoin increased by 700% in its best 10 days. Bitcoin is literally rallying by 70% a day in its best days in 2013. Again, that's a little bit of a, it's an interesting use case to look at in 2013, but the example holds true across every year. Bitcoin surprises people, and it does so in a very violent and quick manner. Have you seen this chart before, Rob? And if so, or if not, what are your thoughts about it?
Yeah, I think it shows you that Bitcoin is a beast, right? And you don't want to mess with it. You want to let it work for you. And the only way to really let it work for you is to just put your dollars, your hard-earned money into Bitcoin and let it sit there and let it grow over time. Yeah, thankfully, I never really tried to trade my Bitcoin. Of course, when anybody gets in this space, they mess around with some alts and you try to get some more alpha off of those and hopefully make that more into more Bitcoin. But at the end of the day, you really have no clue when those parabolic days are going to happen. So you want to make sure that you have all the money that you can afford to have into Bitcoin in it, sitting there ready to accumulate and soak up all that liquidity when it really just pours in.
That's right. You need to be positioned. You need to be ready for the move when it comes. Andy here says, look out, gents, when demand starts to outweigh supply, things are going to get ugly. Things certainly could be getting ugly. Things get really ugly when you don't have Bitcoin or real Bitcoin. Again, today we've been talking a lot about the state of Wisconsin going all in on BlackRock's Bitcoin IBIT ETF. That's literally the headline of this article. State of Wisconsin goes all in on BlackRock's Bitcoin ETF. Now, again, I want to remind people, BlackRock's Bitcoin ETF is not real Bitcoin. We always recommend people go out there and actually buy the real thing. Don't buy substitutes. Don't buy things like the Bitcoin ETF unless you are aware of the risks, okay? Yes, the ETF can serve some customers. We're not denying that. But what we are saying is just be aware of the trade-offs. There are trade-offs with everything in life. There are no certainties. There are no probabilities. We don't know if BlackRock is ever going to rug pull you. We're not saying that. But what we are saying is just be aware of the trade-offs when you don't own real Bitcoin. Okay? We think buying real Bitcoin is a lot easier than most people think. This is why we always recommend people investigate great Bitcoin companies like Azteco, who make buying Bitcoin accessible to absolutely everyone around the world. So if you guys didn't know, you can buy these groovy little Bitcoin vouchers, these Azteco vouchers, for as little as $10. You can buy $10 worth of Bitcoin, and you can do so in 190 countries all around the world. So for anyone who might not know what these Azteco vouchers are, well, they're very similar to like a prepaid gift card, except for Bitcoin. And the really cool thing about these Azteco vouchers is you don't actually need an account. Again, who has tried to buy Bitcoin ETFs? Who has tried to buy stocks on brokerage platforms? You have to sign up with an exchange. You have to hand over all of your KYC documentation. You have to jump through all sorts of different hurdles and all sorts of things, okay? Azteco makes buying Bitcoin very easy and accessible to everyone, which is why we're big fans of what Azteco are doing. And we highly recommend you check out what they are doing. So again, there's a link down below in the description of today's video where you can get started buying with Azteco today. Have you actually, have you tried buying an Azteco voucher before, Rob? And what was the experience like for you?
Yeah, Azteco's great. Super cool, super simple. And one of the best parts, of course, Bitcoiners are privacy minded. And when you buy through Azteco, you don't need to create an account, right? If you give them your email, they don't keep it. No other information is needed from you other than that. And boom, super simple, 10 bucks, 100 bucks, up to $1,000 for one of these gift cards. And you can get your hands on Bitcoin super fast.
Oh, here we go, Rob. Satwise has got a really interesting comment in the chat pertaining to your idea of the new meta. I still love that. I haven't heard anyone call it the new meta yet. But he says, I really don't think we're going to be seeing any more bear markets like we had in the past. So different. I'm assuming he's saying we could be seeing different ones. Models based on similarities between prior epochs will become irrelevant. I could not agree more, Satwise. I think we could be seeing some really interesting things materialize in the Bitcoin space. And it's been my gripe for a lot of time that I think people using the past 15 years of data and projecting that forward into the next 15 years, I personally think it's a little bit dangerous. I just think Bitcoin's fundamentally changed. I think for the first time in Bitcoin's life, we've seen the big boys really enter the Bitcoin space in a big way. We didn't have any billionaires. We didn't have any pension funds. We didn't see any sovereign wealth funds accumulating Bitcoin before 2020. We didn't see El Salvador's. We didn't see nation states mining Bitcoin, buying Bitcoin. We didn't have any of this pre-2020. And we also didn't see something else that I'm about to show you guys, and that is the supply suffocation that's been going on for 4 years now. We've just been watching coins leave exchanges for 4 years. And it doesn't really look like there's an end to that supply suffocation. So again, it's one of my biggest gripes, the fact that we are using old data to project into the future what we think is going to happen. And some people are even very certain about what's going to happen. Some people are saying, look, all of the data is the same. And I just don't think that's true. Like, for example, we're watching the Bitcoin multiplier effect hit levels that we've never seen it hit before. I might change this chart to white. I wonder if that's going to make it easier to see the fact that this purple line on the chart that's measuring the Bitcoin multiplier effects continues to hit new all-time highs. But when has it done this? Post-2020. So again, the argument I'm making is post-2020, we're seeing things we've never seen before. We're watching supply suffocation. This is being created by coins leaving the exchanges. We're watching billionaires like Paul Tudor Jones just quietly double his Bitcoin holdings over the past quarter. We're watching nation states buy Bitcoin. We're watching huge banks in America also quietly 5x their Bitcoin holdings. So a top 10 bank in the US has just said, yeah, you know what? We're going to increase our Bitcoin holdings by 500%. I mean, I would love your thoughts on models, Rob. What do you think about the idea of these models? I could probably go off on a rant about the power law model for 20 minutes on my own. Well, what do you think about models and, you know, this new meta that we might be seeing?
Yeah, I think that seeing parabolic tops like we saw in 2017, I don't know if that's going to happen again. I think that the investors who are a part of this market now are too sophisticated to sort of let it get away from them in that regard, unless we see some real turmoil. I mean, we are sort of in this era of a new monetary reordering with the new Secretary of Treasury, Scott Bessent, realizing that this debt is unsustainable for America. We're going to need to do some things when it comes to the dollar, maybe revaluing the gold that we have. So maybe there are some drastic measures that are taken that could send markets drastically upwards or drastically downwards. But I think over the long run, we're going to see this steady stair-step growth in Bitcoin. And these parabolic blow-off tops might be a thing of the past. But I also think that means that the 80% corrections are also a thing of the past, right? If you just look at the last 3 months, we've had some drawdowns. We went from 108 down to the low 90s, 92, 91. But as soon as we got to around 91, 90, that thing got bid up really quickly. There was definitely some limit orders placed down there from very large players who were ready to buy Bitcoin as soon as it got down into the low 90s. So these drawdowns that we've been programmed to get used to and expect, those might not be coming around again. But again, it's Bitcoin. So you don't know. And it's all about being in the market for those 10 days in which it outperforms everything else.
I think it's a great point. It does look as if somebody is buying a lot of Bitcoin whenever it hits 90K, which is very interesting to see. It's a great point you raised. We are watching something really interesting. And another really interesting point you raised was about gold. So a lot of people have been talking about Donald Trump's tariffs recently and what this could potentially mean for gold. And again, there's some really interesting theories circulating around about gold. A lot of people are kind of asking themselves, you know, will Donald Trump's tariffs that he's creating completely drain the gold market in the UK? Why are we watching record amounts of gold leave the UK and go to the US? These are some really interesting questions I think a lot of people are not asking themselves. And it gets even more interesting when we consider the fact that the world's richest man, Elon Musk, right now wants to audit the Federal Reserve. So I think when we start talking about this rabbit hole of a supply suffocation happening in the gold space, we need to think, okay, if we do see a supply suffocation in the gold space, what impacts will this have in the Bitcoin space? So those are some questions I want to explore here, Rob, regarding gold. Thank you for bringing it up. I think it's very interesting. Let's start with Trump's tariffs and JP Morgan flying gold from London to New York. Have you seen this? And what are your takes on the supply suffocation that we're watching manifest in the gold market? Because by any account and by all the charts that I've seen, we're seeing some things that we have not seen in a long time. Have a look at this one, for example. These are the daily changes in the amount of gold that's flowing into the COMEX. We can also see that right now, this is hitting 2020 panic levels. Right now, the panic that we're seeing in the 3 big gold vaults, it's bigger than what we saw in 2020 when there was a massive run on physical gold and silver. When we were at the peak of that, you know, let's call it the hysteria, the 2020 hysteria fears that we saw. And I think it's fascinating that we're seeing some similar things materialize here in 2024 at a time when gold right now is actually at an all-time high.
Yeah, weird things are afoot. You can see it all started in December, right? After Trump was elected, the gold started leaving the London vaults and started heading back to New York in the COMEX vaults. So what does this mean? I think that we have an administration that has put in place that knows that the jig is up, right? I mean, Trump in his first term added $8 trillion to the national debt. Biden added $8 trillion to the national debt. It's an addiction that this country has, and no president before Trump on his second term really seemed like they were willing or wanted to deal with this. But it seems like the people that are around Trump now realize that we got to get ahead of this before it's too late. And so now they're making moves. And some of these are clandestine, as I think we're seeing with this gold market. They aren't going to tell you out loud that they are going to start a new hard money era before all the ducks are in a row, right? So they got to do some things secretly. And so what do I think is happening? I think they're repatriating the gold. They're getting the gold out of London and getting it back on American soil. And so what do you see? You see the LBMA, the major gold market in London. Usually if you requested your gold, they would send it to you within a couple of days, 2 to 4 days max. Now they're saying 4 to 8 weeks to get your gold. That means that, hey, that means they don't have it, right? It's sort of like a soft default. They need that much time. They need a month or two to source it, to get it, to send it to you. So, and I mean, the cost to borrow gold went up like 300% in a matter of hours 2 weeks ago, right? So gold is being called for from around the world. People want it physically in their own jurisdiction so they can get their hands on it. They don't trust these bankers in London to be sitting on it. And as we've seen for the last 3 years, central banks have been buying a record amount of gold each year. So I think it's central banks were buying, I think it was around 11,000 tons per year for the last 3 years. These central banks realize that this debt game, the jig is up, right? And so you need something to back your currency, to show that your country is worth its weight, and hard money is it. And we live in an analog era previously where gold was the only option, but now we've got Bitcoin as digital hard money as well. And it seems as if America is getting into that game too.
Well, you said a couple of very interesting things there, Rob, about the central bank supply squeeze I think we're seeing. Central banks right now are buying gold for the first time, really, in 50 years. So post 2008, we saw this fundamental shift. That's what this chart here is showing us. So the blue bars is showing us the net purchases of gold. And since 2008, for the first time in a long time, we've seen a decade of consistent demand and buyer pressure coming from central banks. And I think, 2008 really woke people up to the fact that the Ponzi is over. The gig is up. These guys, like you said, they don't have the gold, which I think is crazy. You mentioned something else about a wait time for gold in the UK exploding. I also saw something similar, and it's absolutely crazy that right now they're making you wait, 8 weeks, 6 weeks? They don't have it. They do not have the physical thing.
No, and I mean, some people are saying that for each kilogram of gold in these vaults, there's up to 100 people who have a claim on it, right? This thing has been rehypothecated out endlessly, up to 100 times. And that's the problem with gold, is that you can't verify it. If it's sitting there in a vault, they could say, if say Switzerland buys it from France, they can move the gold from one corner of the warehouse to the next corner of the warehouse. But at the end of the day, you don't know how many people have claims to that gold sitting there in that basement. So it's that's the beauty about Bitcoin. It is audited every 10 minutes. We know every 10 minutes when a new block is found, we know exactly where all the Bitcoin is and which addresses own how much. This is something that is simply impossible to do with gold. So whenever anybody says, oh, I want to have gold on the blockchain, well, you're just going to have the same exact problems that you have today, because gold is so hard to verify and keep track of on such a large scale.
You make another great point. We know exactly who owns the Bitcoin. We have no idea who owns the gold. The gold it's so opaque. It's not transparent. We don't know what's happening. There's rumors circulating that China's squatting on something like 20,000 metric tons of gold, despite officially saying, hey, we've only got 1,800. So again, there's a lot of rumors and a lot of really good data that actually suggests that China is sitting on 10x the gold that they are sitting on. So I think it's really interesting that Trump wants to audit the Fort Knox reserve of gold. I want to talk about that in a moment because I think that could open up a whole nother rabbit hole. But this is what you're talking about, Rob. Traders are moving so much gold from the Bank of England to the US to avoid Trump's tariffs that the waiting times have reportedly octupled. Is that even how you say that word? And what is that? Is that an 8x?
8x, that's an 8x. And I think this whole tariff story is just a cover. I think it's giving an excuse for them to move this gold back. But I think that there's been a call from the highest levels of the Trump administration that any gold we own or have claims to, we want it on our territory because there's more than one person who thinks that they own the same amount of gold. So we want it within our jurisdiction, and you're going to have to come send your warships over like Charles de Gaulle to try to steal it back from us. And it's interesting that, yeah, as you said, that Elon wants to audit Fort Knox, which supposedly holds 5,000 tons of gold, more than half of America's supposed entire stash. And the problem here is that Fort Knox hasn't been audited in 50 years. They haven't done a full audit since the 1950s, right? And so that's over 70 years. This could be a big problem, right? That Fort Knox, that fort could be empty. I heard a funny quip today online. The president goes to Fort Knox and says, "Guard, let me see how much gold we have." The guard says, "Can't do that, sir." "Let me see how much gold we have." "We can't do that, sir." The president says, "Why?" "Because we don't have any." And the president says, "Okay, double the amount of guards." You know, it's with gold, you don't know. It's it's a trust game. Gold is a trust game, especially when it's all sitting in one place in one vault and no one's taken a look at it in over 50 years.
And now maybe we're going to find out how much gold is there, because as we can see, Elon Musk's Doge prepares to audit the gold reserve at Fort Knox.
Yeah, and I mean, of course, a lot of gold bugs have said that the gold hasn't been there for decades. And then there's some other people who say, well, what if they find that there's more gold than we actually said we had? So we don't know. That's the thing. It's Schrodinger's gold at this point, right? It could be there, it could not be there. And it's a lot of money. It's a lot of money. And I mean, also speaking of gold, the gold that we have on our balance sheet for America, it's all marked to the 1970s price, which is $42 an ounce. Whereas the modern price right now, it's $2,900 an ounce. So there's talk of if we do audit this gold and we see it's all there, then they would mark it to market and create a line item at the for the Treasury to borrow against from the Fed for over $800 billion. What would they use that $800 billion for? Well, that's what Cynthia Lummis wants to use to purchase up to 1 million Bitcoin through the Bitcoin Act. But there's other initiatives that are underway, such as the Sovereign Wealth Fund too, right? So the Sovereign Wealth Fund needs to get funded. Is that where they're going to find the money for that?
Yeah, that's a really interesting point you raise about the Sovereign Wealth Fund, because I think we are going to be talking about the Sovereign Wealth Fund here in a moment. But that's also a misconception about Cynthia Lummis's bill about the Bitcoin that she wants to buy. We don't even have to print any more money to buy the Bitcoin.
Yeah, I mean, it's sort of all accounting gimmicks and tricks. I mean, right now the gold is not marked to market, right? We're sort of missing out on the opportunity to leverage that gold if we actually do have it. So it makes sense that why we would want to have it valued at $2,900 instead of $42. But at the end of the day, we're returning to a hard money world, and we need that Bitcoin, we need that gold in order for the currency to really be worth its weight. So let's see what happens.
I might put you on the spot here, Rob. I want your honest thoughts. Do you think we can ever return to a gold standard? And if so, or if not, what are the probabilities of us seeing a gold standard? Do you think it's more likely than a Bitcoin standard?
No, I think the reason that we're in the pickle that we're in today is because gold doesn't work in the modern world, right? We need fast transactions. We need the total supply to be verified at least every 10 minutes, like in the case with Bitcoin. So we went into a fiat world because the transactions were too slow with gold, dating back hundreds of years, right? Lynn Alden in Broken Money says that as we had greater communication leaps in technology, we needed faster transaction speeds, and that gold couldn't do it. So we transitioned to paper fiat and then to digital credit, right? And so we've got numbers going back and forth on a screen endlessly. But the real beautiful thing about Bitcoin is that it is a secure, immutable ledger. And when those numbers go back and forth on the Bitcoin ledger, that's forever. There's no clawbacks. There's no getting that Bitcoin back once it's sent to a different address, unless the person with those private keys decides to send it to you. So yeah, do I think we're going back to a gold standard? No, but I think that gold will still have somewhat of a place for central banks, as we've seen for the last couple of years, them trying to gob it all up. And yeah, and I think Bitcoin will have a larger and larger role. I mean, we're still only a $2 trillion asset, right? We got a 9x to match gold. And I think that it's going to absorb the monetary premium of a lot of other assets in the meantime.
What do you think are one of those assets that's most at risk of being absorbed by Bitcoin?
Real estate, of course, real estate. Yeah, people have just turned housing into a way to defend their purchasing power, while the house that you live in itself has not gotten any more valuable. It doesn't keep you any warmer than it did 50 years ago. It doesn't protect you from the rain any more than it did 50 years ago. And yet its price has gone up 10x, right? And that's simply because people are looking for a way to maintain their purchasing power before they have found Bitcoin.
I tend to agree. I think the $300+ trillion real estate market is going to be in for a little bit of a rude shock when people begin to realize just how good digital gold is and digital real estate. Some people call Bitcoin digital real estate. It really is the best property that you can ever own. And we're watching people slowly but surely come to that realization that, Bitcoin, there is no second best. And everybody is scrambling to get exposure to Bitcoin in any way, shape, or form that they can. Now, I think this is absolutely fascinating because we have literally just seen not only BlackRock, the world's largest asset manager, but we have also seen 12 different states in the US who right now have been quietly buying MicroStrategy. You can see the names of the states who have been exposed for quietly buying more MicroStrategy, but we have more. We obviously know that BlackRock right now is squatting on 5% of all of the MicroStrategy that will ever be created. But I think we could potentially put a little bit of a tinfoil hat on when we start thinking about what Cantor Fitzgerald is investing in. That's right. He's Trump's right-hand man. And if we peep inside his personal portfolio, we can see that Cantor Fitzgerald is squatting on a lot of MicroStrategy, $1 billion of MicroStrategy, making up 39% of Cantor Fitzgerald's portfolio. Rob, we do know that Cantor Fitzgerald is going to be helping the US create its sovereign wealth fund. Are we reading into this a little bit too much to suggest that, hey, maybe America's sovereign wealth fund could include MicroStrategy into it? Are we seeing signs that the billionaires, the bankers, we haven't even mentioned the fact that JP Morgan, of course, a bank that's not a big fan of Bitcoin, but a bank who just quietly bought $100 million of MicroStrategy stock, is also buying Bitcoin. So if we have JP Morgan quietly buying MicroStrategy stock, if we have BlackRock been forced to admit that they have also increased their exposure to MicroStrategy over the last quarter. And we now have the man who's going to help create America's sovereign wealth fund. He is squatting on 40% of his portfolio being dedicated to MicroStrategy. Is it crazy to ask the question whether MicroStrategy could be included into America's sovereign wealth fund, Rob? Am I just reading into this a little bit too much, or what are your thoughts on this whole rabbit hole I think we might be exploring here?
Yeah, I mean, the rabbit hole goes deep. Howard Lutnick is the man who was the CEO of Cantor Fitzgerald, and he is now the Commerce Secretary for President Trump. He was gunning for Secretary of Treasury, but Trump sort of pushed him aside and said, no, it's okay. You're going to be the Commerce Secretary, and I'll give you the job of figuring out America's sovereign wealth fund. So they've got 3 months, I believe, to put together a report and then come back with their findings. But if you read the tea leaves and see how Cantor Fitzgerald just increased, 40% of a portfolio, that's your biggest bet, right? I mean, that's what you have the most belief in. And their belief is in MicroStrategy, them creating financial products, taking Bitcoin, turning it into financial products and selling it to the rest of the world. And so, yeah, we got this man right here. And I mean, Howard Lutnick, he's been in the Bitcoin game. He says that he owns hundreds of millions of dollars worth of Bitcoin personally. I think he said that to Anthony Pompliano on a podcast with him when he was at the Bitcoin conference this summer in Nashville. He came out on stage and said that he had a shed load of Bitcoin. It sounded like something else, but he said shed load. And the other thing that we must remember about Howard Lutnick and Cantor Fitzgerald is that they are the custodian for Tether's treasuries. Tether, the stablecoin provider that has $100 billion worth of treasuries. They store them at Cantor Fitzgerald, and that's where Tether makes most of their money, right? They get the coupon, they get the interest on these treasuries, and they go and turn that into investments. One of their main ones being Bitcoin, right? So Howard Lutnick has been tangential to the Bitcoin world for many years now, as much as a big banker could be before this new Trump era and the opening up of Bitcoin to the financial markets. But yeah, I mean, these guys believe in MicroStrategy. BlackRock, 5% ownership. Cantor Fitzgerald, 40% of their portfolio in MicroStrategy. These guys really believe in Michael Saylor, his vision, and the fact that his company owns 478,780 Bitcoin. 2.3% of all the Bitcoin to ever exist. These guys see what he's doing, know that his appetite for more Bitcoin has not slowed down, and Michael Saylor could be aiming for 1 million Bitcoin, right? He could be aiming for one Nakamoto, the equivalent of Satoshi's stash.
I like that, one Nakamoto. I've never heard that before, but we can see exactly what you're talking about there, Rob. I pulled up a chart, and in the chart might not be updated, but I do believe IBIT on the right-hand side of the chart is still outpacing MicroStrategy. But aside from BlackRock and Satoshi Nakamoto, there's not many entities who hold more Bitcoin, which I think this does open up a little bit of an interesting rabbit hole. Some people are saying we should be wary of BlackRock trying to buy so much Bitcoin, so much MicroStrategy. I've made videos in the past exploring some of the interesting wording that we found in prior BlackRock ETF filings. This is their initial Bitcoin ETF filing. On page 24, BlackRock says that if we see a hard fork, essentially, we get to choose what hard fork that your invested money with us is going to support. BlackRock says there is no guarantee that the sponsor, so BlackRock, will choose the digital asset that is the most valuable fork. Again, people have been pointing towards the fact that BlackRock is saying things like that. Now they're taking massive stakes in companies like MicroStrategy, one of the biggest Bitcoin-focused companies. We also know that, I hope my chart highlights what I'm trying to show you, but BlackRock is one of the largest shareholders in 4 out of the 5 largest Bitcoin mining companies in the world. So they have 6% of Riot, They own 6% of the shares of Marathon, and they are a number 2 shareholder of Cypher as well as TeraWulf Mining. So again, some people are saying BlackRock's either incredibly bullish on Bitcoin because they're trying to get exposure everywhere. It's not enough that they own hundreds of thousands, 500,000 coins, but they're buying 5% of MicroStrategy. They're buying majority shareholder positions in a lot of the mining companies. What do you think about the opinion or the hypothetical thought experiment of BlackRock just being in it because Larry Fink's been orange pilled? Or do you think there's something we should be paying closer attention to, Rob, when it comes to BlackRock?
So yeah, I mean, BlackRock, of course, is the world's largest asset manager. They've got $11.5 trillion to manage. But I think it's also important to remember that it's not like Larry Fink is just sitting on $11 trillion and it's his and he can move it however he wants to, right? He's investing this money on the behalf of other people. It is true that with that 5% ownership of MicroStrategy, they do have 5% of the votes, right? When it comes to where the company should go. If there's a shareholder meeting and there's a vote put up, they are able to vote on behalf of the people which they own that stock for, of course. So it is interesting in that regard as to how the sort of direction they could push, but still it's only 5%, right? I mean, Michael Saylor has a much larger share of MicroStrategy than I think BlackRock ever will. And so, and that's the beautiful thing also about Bitcoin is that it doesn't really matter how much of the network you own. You can't stake this thing, right? You don't get more Bitcoin for having a larger Bitcoin stack. It just means that you can move X amount of Bitcoin at your own free will. I think what's more sort of interesting from a geopolitical standpoint, it might be the ownership of the miners. I think as time goes on, having hash rate within your own country's borders is going to be more of a matter of geopolitical importance. The fact that you can ensure that out of X amount of time, you will be able to get into a block and move the Bitcoin as you wish and not be at the will of somebody else. So yeah, I think who knows? Maybe there will be a push at the end if things get crazy to try to nationalize something like a MicroStrategy or these Bitcoin miners. And BlackRock has definitely, whether it's the 2008 financial crisis or 2020 COVID, BlackRock has been put in a position to sort of clean up these messes and to dole out the money as they see fit to try to fix them. So yeah, they hold a lot of power. Some people say that they're like the fourth arm of the US government, right? So money talks, they've got a lot of it and they do have a lot of power. But the beautiful thing about Bitcoin is that having more of it does not grant you any more power of the network over anybody else who just has a couple of Satoshis, right?
Well, this is the beautiful thing about Bitcoin. You know, Bitcoin is a decentralized network. It is an unstoppable network. We always, again, encourage people to self-custody their Bitcoin. Please do not own BlackRock's Bitcoin ETF. They just openly told you that it doesn't matter if there's a hard fork. We could choose the uneconomical chain. So if you own BlackRock shares of their Bitcoin ETF, you might be stuck holding a big pile of poo. You might be stuck holding the fork of Bitcoin that is not worth anything. This is why we always encourage you guys, self-custody your Bitcoin, not your keys, not your coins. This is why we always encourage you to check out what Rhino Bitcoin is doing. We think they're the all-in-one Bitcoin super application. They let you buy Bitcoin, sell Bitcoin, even use the Bitcoin Lightning Network to send Bitcoin anywhere around the world. And in the not too distant future, they're going to be coming out with some really cool features that will allow you to do things like borrow against your Bitcoin. So we highly encourage you guys to check out what Rhino Bitcoin is doing today. They're even going to give you guys $10 of free Bitcoin if you sign up with a promo code Bitcoin News. So that's one word, Bitcoin News. Check out what Rhino Bitcoin is doing, everything you need to know to learn about Rhino and get started buying Bitcoin the right way. That is through a Bitcoin-only application that's going to teach you about self-custody. Everything you need to know about that is linked down below. So check out what Rhino is doing today And again, go get yourself $10 of free Bitcoin while you still can. I'm not sure whether companies will be giving out $10 of free Bitcoin in the future, Rob, but I feel like those days are numbered.
Giving out $10 worth of free Bitcoin might still happen, but it's just a question of how many sats will that get you, right? Today, that's still 10,000 sats, but in the future, that might just be 1,000 or 100, right? So yeah, get those 10,000 sats while you still can.
It's such a mind flip to start thinking in Satoshis. I try my best to think about everything in terms of Bitcoin. And it is a lot easier now with Bitcoin at $100,000 a coin, but you make a great point. 10,000 Satoshis, one day could be worth a lot of money. One day it could be worth an incredible amount of money, especially if we do continue to see banks doing what Citibank has recently done. $6 trillion State Street and Citibank are launching Bitcoin and crypto custody. I'm still pretty shocked when I see headlines like this, but I think headlines like this really reinforce the fact that, you know, we're very, very blessed to be able to buy 10,000 Satoshis for the price that they are today. And I'm just not sure how much longer we're going to be able to wait around and take advantage of these super cheap Bitcoin prices.
Yeah, I mean, these Citibank coming out and saying that they want to launch Bitcoin custody is a huge deal, right? Of course, Michael Saylor laid out the plan to $5 million Bitcoin in his mind. Number one was the ETFs, of course, we got that. Number two was the FASB accounting rule changes where Bitcoin could be marked to market instead of just reported at a loss whenever it went down. You had to mark it down on your balance sheet, but could now mark it and report those gains on your financial filings. And then three, of course, was for banks to be able to custody Bitcoin. And with the repeal of SOB 121 and the end of the Biden regime, we are seeing banks jumping right in. And yeah, I mean, Bitcoin is an amazing thing that you as an individual can custody your own keys by just remembering 12 words in your head, and you can travel anywhere and maintain full sovereignty and control over your Bitcoin. But when it comes to things like pension funds and whatnot, that is not the best solution, and you want to put it with a quote-unquote reputable place. A place like Citibank is probably where you want to store your Bitcoin if you're a big pension fund.
Yeah, I mean, that's probably a great point as well. I mean, there's different horses for different courses. And like we mentioned earlier in the stream, a Bitcoin IBIT BlackRock ETF could be used by someone who might have, you know, Bitcoin in they might have money, in like a Roth IRA or somewhere where they can't buy direct physical Bitcoin. That's a little bit outside my realm of expertise. We just call them superannuation accounts in Australia, but I believe that, you know, the BlackRock Bitcoin ETF, that's one way to get exposure to Bitcoin in a Roth or some sort of retirement account in the US. Rob, is that right?
Yeah, with your 401k, you can purchase these financial instruments as you would through any brokerage, and MicroStrategy and IBIT are one way to do that.
Okay, that's very interesting. And again, kind of like you say, these banks right now are aggressively accumulating Bitcoin. But what I find really interesting is that the banks are not alone. We are now seeing some really interesting things develop. We literally just saw the sovereign wealth fund of a Middle Eastern giant with $500 billion worth of GDP just come out and quietly announce that they have bought $500 million worth of Bitcoin. Of course, we're talking about the Abu Dhabi sovereign wealth fund has been exposed for buying $437 million worth of Bitcoin, but they're not the only nation state who has a public Bitcoin mining plan that is not only in public, but actually aggressively growing. So we also know that the hash rate is going absolutely parabolic right now, while we have nation states being exposed and sovereign wealth funds being stood up all around the world. So today I want to really kind of talk about what exactly is going on. Are we watching the Middle East and their sovereign wealth fund aggressively accumulate Bitcoin in response to Donald Trump's recent announcement saying, hey, It's about time America has a sovereign wealth fund, because America does have, what, a $29 trillion GDP. And if they do enter the sovereign wealth fund space, is it a stretch to suggest that maybe America might want to compete with some of the other largest sovereign wealth funds in the world that are around $1 trillion in size? I mean, let's have a look. We got the Norway sovereign wealth fund, 1.1 trillion. China's got $1 trillion sovereign wealth fund. The Abu Dhabi Investment Authority, the one we're just talking about, they have $570 billion in their sovereign wealth fund. So a $500 million stake into Bitcoin is not chump change. It's a pretty big investment. What do you think we're looking at here, Rob, in the realm of the Middle East, potentially making a move into Bitcoin? And do you think this is a reaction to Donald Trump announcing his intentions to create a sovereign wealth fund in America?
Yeah, so this word just came out this last weekend, but they had been purchasing starting at the end of last year, right? And so when it comes to $437 million for Abu Dhabi, actually, I would disagree. I do think that is chump change. I think that this was just them getting their feet wet. They are testing the market, seeing how much, how it moves according to their purchases, if they are affecting the market too much when they buy in, and what it does. And so, yeah, I think this is just the beginning, right? It makes all the sense in the world for these energy-rich countries. We know that Bitcoin is energy money. You turn energy into Bitcoin through hash power, and as we've seen on the chart that you just showed, hash power is going parabolic. And interesting chart that we put up on Bitcoin News X account today. Bitcoin hash rate has surged 772% since China banned Bitcoin mining in September 2021. So that little niche in the graph, you see it go down a little bit after 2020. That was the China ban, quote unquote. But since then, it's gone straight up, right? And as Max Kaiser always says, Bitcoin price follows hash rate. And so with this level of hash rate, we can expect Bitcoin to rip within the next year or so. The difficulty adjustments keep going up. That means that more and more miners, this isn't just the efficiency of the miners themselves going up over time as technology progresses and these same one box of a miner can produce more terahashes. No, this is a massive industrial push around the world to add hash rate to the Bitcoin network. And I think a race to also try to get as much hash rate within your jurisdiction as possible so that you have the ability to get into a block in a timely order if the world moves into a more contentious stance between nation states.
Now there you make a really interesting point about contentious stance and nation states, because we're looking at the chart of what happened to the hash rate after China banned Bitcoin mining. Now, speaking of China and the Middle East, the parabolic hash rate we're seeing right now, I think could have something to do with this headline I've pulled up in the background. For the first time in a long time, these Middle Eastern countries are accepting different forms of currency for payment. So Saudi Arabia is considering and accepting Chinese yuan for dollars. Is accepting Chinese yuan for oil. This is the first time that the Middle Eastern countries have been accepting and open to accepting currencies outside of the US dollar for what 50 years since the petrodollar system was created. And we do know that Saudi Arabia is not the only Middle Eastern country, let's just say, having a little bit of a peep at Bitcoin. We do know that the National Bank of Bahrain actually made history in late 2024 by becoming and creating the first ever Bitcoin-linked product in the GCC. That is the Gulf Cooperation Council. So my question to you, Rob, is this going to be a broader trend? Can these Middle Eastern giants successfully use things like Bitcoin mining, and let's call it what it is, Bitcoin exposure through sovereign wealth funds, to escape this petrodollar system that they have been forced to use and abide by and participate in for the past 50 years?
Yeah, I mean, you're seeing it. I think it was a great article to bring up. Saudi Arabia is taking yuan instead of just dollars, right? We had a 50-year agreement with them where they would only accept dollars for oil, and we would provide them with defense and arms and make sure that that royal family stayed in power. But now it seems as if they're looking around and seeing what other options are out there. And America isn't the only big kid on the block anymore. China needs a lot of oil. We need a lot of oil. And the Chinese are willing to pay for it, right? And so when you're in the Middle East, you're sitting on all the energy resources you could ever want or need, and you want to transition out of the fossil fuel industry and more into tech and tourism and whatnot. I think Bitcoin mining is a great industry to pivot into, right? Turn that energy into Bitcoin, create tech jobs, and transition into a 21st century economy. And so it's not only just the Middle East, but also right next to it is Ethiopia, right? Right across the Red Sea there. And what do we see there? We saw Ethiopia really gobble up a lot of the miners that were shut down in China in 2021. A lot of them moved to Ethiopia because there's a lot of trade connections between the two countries. They have great weather and climate, and also renewable resources. They have this huge Grand Renaissance Dam that is creating a lot more electricity than they can consume at the moment. So Ethiopia is exploding in Bitcoin mining. They want to go from 2% of the global hash rate right now up to 5% by the end of the year. They want to double the amount of hash rate that they produce within 1 year. And it's leading to economic growth because these Bitcoin miners are able to provide the infrastructure that is needed to capture the electricity from this dam and then spread it out into the country where the funding would not be there if it wasn't for these people coming in with a use for the electricity.
You make such a great point about Ethiopia. I quickly brought up the headline in the background here, and Ethiopia, a tiny country in Africa, accounts for 2.5% of the Bitcoin network. And now this is something I think a lot of people forget. Bitcoin is going to benefit these smaller countries because Ethiopia's got a tiny population. I mean, let's be honest. Let me retract that a little bit. 126 million people. It's not tiny, but it's not massive. It's not big. Okay. Ethiopia's GDP, for example, yes, it has been growing recently, but it's only 160 billion. They don't have 2% of the world's people or 2% of the world's GDP, but they have already a 2.5% stake in the Bitcoin mining network. So this kind of goes back to the point we always talk about here on the channel. Bitcoin is empowering the little guy. Bitcoin is not for the large, bloated Western nation states. I mean, sure, these guys are going to buy Bitcoin. Don't get me wrong. Bitcoin is for everyone. Bitcoin is for enemies. It's for friends. But the Bitcoin monetization phase that I think we're in today, Rob, that is going to benefit the little guys who can be a lot more nimble and make these big, large strategic investments into the Bitcoin space.
Yeah, I mean, perfect example is Bhutan, right? They got on the Bitcoin mining train early, again, like Ethiopia, using renewable energy, specifically the same as Ethiopia, hydropower. They're up by the Himalayas. The water melts in the mountains. It comes down and creates a lot of energy, and they're able to capture that and plug in some miners and turn it into Bitcoin. And so Bhutan was able to amass 13,000 Bitcoin from their mining operations, right? Silently, quietly, just since around 2018, 2019. I think they started a little bit, but now they're out in public with it, and it is huge business there. I think it's roughly a third or a quarter of their GDP they hold in Bitcoin that they've mined over the last 4 years.
And the crazy thing is the fact that they've been doing this secretly. This is the beautiful thing about mining Bitcoin. I think this article here sums it up nicely. Bhutan has been secretly mined Bitcoin in the Himalayas for years. And you make another great point. They own the fourth amount of Bitcoin of any other nation state around the world, but they only have 780,000 people. It's crazy. They don't even have 1 million people. I don't know what the exact maths are. Maybe someone in the chat can do some quick maths and some quick Googling to see how much 780,000 people is of the 8 billion population. We'll give a prize to any of the 2,960 of you guys tuning in between YouTube and Twitter who can get that maths right first. But they certainly are not a big player in the realm of GDP, economic might. But all of a sudden, because they have about half of their GDP invested into Bitcoin, they're potentially going to benefit a lot from the monetization of Bitcoin, which is just going to be very interesting to see what's going to happen with the El Salvadors or the Kingdom of the Bhutans, all of these very small countries. What is going to happen to them, or what are they going to look like in 10 or 15 years?
Yeah, and I mean, this is a historically poor country, right, that had actually forsaken the metric of GDP and had instead measured national success by gross happiness was their metric that they tried to measure how successful their country was. Yes, and I mean, El Salvador is, they're mining some Bitcoin, and they, of course, are buying 1 Bitcoin a day for a strategic reserve. Bhutan is at a much larger mining operation. They're accumulating much more. I think they've over doubled the amount that El Salvador has, but they're also selling some of it too, right? They've sent some to exchanges to, of course, turn into dollars and fiat to fund the country in different initiatives that they need. But it just goes to show you, this is a source of income that they had no access to whatsoever before Bitcoin. And they're setting themselves up to be quite the wealthy little kingdom come the next following decades.
I 100% agree with that. And Andy in the chat, I think, has done some quick maths. Andy says it's 0.0001% is the population of that the Kingdom of Bhutan owns. I think that sounds about right off the top of my head. So thank you, Andy, for doing the maths. I think McLovin in the chat also makes a really interesting point. Nations getting pillaged by a strong dollar have a need to know. It's a great point. Which nations around the world have been pillaged the most with inflation over the past 3 years? We're talking about countries like Argentina, 250% inflation in 2022. Pakistan, 100+% inflation. Turkey, 100+% inflation per year, okay, in 2022 and 2023. These countries also have massive Bitcoin adoption rates. These countries, as McLovin in the chat has said, they have a need to know. And it's really cool that these countries can get exposure to Bitcoin by secretly and quietly mining Bitcoin in the Himalayan mountains. Again, this is the beautiful thing about the Bitcoin network. You can do really cool things like mine Bitcoin quietly for a long amount of time, and nobody would even know. So again, if you are looking to not just learn more about Bitcoin mining, but if you are looking to learn more about Bitcoin overall and just connect with some other great Bitcoiners in person, we like to always let you guys know about the largest Bitcoin mining conference in the entire world that's happening in about 6 weeks' time in Florida. Of course, we're talking about Mining Disrupt. This is happening on March 25th through to March 27th. It is, yes, I didn't stutter, the biggest Bitcoin mining conference in the entire world. You're going to have speakers like Dennis Porter, Nico Moran. There's going to be a ton of other great speakers there. Some very popular politicians who may or may not be making announcements. Again, I'm not making any speculations, but what I am saying is that politicians typically make some pretty big calls and pretty big announcements at conferences. And if you are a politician, you'd probably want to do that at the largest Bitcoin mining conference in the entire world. So again, I want to remind you guys, this is happening in about 6 weeks. Get your tickets while they are still available. Again, a lot of people talk about the future. Let's not just talk about it. Let's actually be a part of it. And this is the beautiful thing about connecting with other Bitcoiners at these in-person events. So again, grab your tickets. If you don't have one yet, you can get 20% off your tickets if you use a promo code Bitcoin News. Again, that is one word, Bitcoin News. Grab your tickets at the link down below in the description of today's show. I am going to try my absolute best to maybe do a little bit of a border run and get myself to Florida here for this conference that's happening in 6 weeks. How about you, Rob? Do you have plans to make your way down to the largest Bitcoin mining conference in the world happening in Florida in about 6 weeks' time?
Yeah, no, it's a great one. Was there last year. It's high energy. The people know what they're talking about. It's all the industry leaders from the mining pools to the actual mining rig creators. If you're just a solo miner who wants to get into the game, expand their rigs out a little bit, or you're an industry player, you have to be there. Big announcements, as you said, are made. Senator Ted Cruz was there last time. Senator Ted Cruz, who says that he's actually addicted to Bitcoin mining himself. He loves to check his phone every single morning to see if his number has gone up, the number of sats that he's found. But yeah, as a miner myself, it's fun. It's a great hobby to get into, and there's no better place to learn than a place like Mining Disrupt.
So you're a miner yourself, which means you are potentially contributing to the crazy charts like this one of the Bitcoin hash rate going absolutely parabolic. This is the beautiful thing about Bitcoin. The beautiful thing about Bitcoin is individuals can get exposure to Bitcoin at their home, literally mining Bitcoin, heating up a hot tub. Nation states can mine Bitcoin. You can do it at any scale, whether you're a big guy or a little guy, it doesn't matter. This is the beautiful thing about Bitcoin. Bitcoin is for everyone, which is very different to our current financial system. But again, Rob, I think we have been chatting here for about 75 minutes. There's 3,000 of you guys tuning in. So thank you so much to everyone tuning in on this Monday afternoon. Do you have any final thoughts or final comments on a few of the bigger stories that we've discussed today in this long live stream that you think people should be paying attention to as we move into the next week?
Yeah, I mean, I think there's so much going on right now. It's sort of hard to keep track of. We've had 30 states introduce Bitcoin legislation, whether it's Bitcoin strategic reserves or the right to mine or to run a node. We've got sovereign wealth funds getting in. We've got America creating its own sovereign wealth fund. We've got hash rate going through the roof. This is a really exciting time to be in Bitcoin, to understand Bitcoin, to help family and friends become a part of it. It's things move very fast, and you want to be allocated at the right proportion, which is comfortable to you, but you want to be in the game because, as we know, fiat money, there is no top to Bitcoin because fiat has no bottom. So keep getting your education up, keep learning, and stay in Bitcoin for the long term because it's the best for you and your family.
I think that's a great note to end things on. With all that said, howdy to you, Daniel, in the chat, and greetings to Johnny Midas, the man who's never missed a live stream. Thank you so much to the 3,094 of you guys tuning in. I'm going to end this one here, and you're going to see me and Rob in another live stream in the not too distant future. So enjoy the rest of your day and go out there and buy some more Bitcoin.